I started my career as a car finance guy. As traditionally, everybody starts as a car finance guy. I always look at the earnings.
Okay.
The market is a slave for earnings. I think if earnings is good,
Yeah.
the stocks will do well. My belief is that if India need to be a 2030 a trillion, your consumption economy should do well. And as we speak today, we are 3,10,000 crore assets.
Wow.
And
Hi friends, welcome back to another episode of Cherry Insights. Today we have my dear ex-colleague from Kotak, Mr. Gopkumar, CEO of Axis AMC now, previously CEO of Axis Securities. Welcome, Gop.
thank you, and welcome to our office.
So it's a very cool office, I must say. It almost looks like a five-star hotel. So,
Yeah, typically asset management companies have this type of-
good-looking offices.
because a lot of clients come in, a lot of distributors come in, and another thing is that this is a new set of office in the sense that all new set of office across industry has this type of feeling. It's not
So
that
you
we
moved
created-
here when?
some 6 months back.
Okay, and before this you were in
We were
the
in Axis House.
Axis Bank in
Yeah.
Bombay Dang
Yeah, Bombay
compound. It's cool. So and you joined Axis AMC 2 years back.
Almost 1.5 years back.
So I must tell, Gop had a really long and flourishing innings with Kotak. It was what, 20 years?
16 years.
16 years, and across securities.
Oh, I
bank-
did a lot of roles, yeah. I think I started my career as a car finance guy. As traditionally, everybody starts as a car finance guy.
Okay.
90s, because the capital market was very small. If you ask me when I passed out my MBA, I always wanted to become part of the capital markets.
Okay.
I don't know why, because that fancied me, because my dad was a first batch of company secretary.
Okay.
We used to get IPO forms at home. So that's how it is. And I came to Bombay for such a job.
So you are not originally from Mumbai.
No, I'm not from there. I belong to a small place called Bangalore, which is a very coastal district.
Yeah,
50
Mangalore
years
is a
back.
beautiful place.
Yeah, if you have 2 fish curries, people are happy about that. And we used to get newspapers, Bombay edition newspapers only after 1.5 days. So Sundays, I used to go to public library to look at what's happening on Times of India Bombay edition. So that's how life was there. So capital market was always fancied me that point of time. But I think opportunity was very less. Second is that even in the finance services was very difficult.
Yeah.
So when you finish MBA at that time, the biggest problem was that
This was which year?
94. You either want to do a career in advertising, or marketing communication, or FMCG.
Okay.
So my first career was in marketing communication.
Okay.
I was part of Interton Informatics, which is had a very of large 4 or 5 JVs, and I was a corporate guy doing marketing communications, preparing pamphlets, helping product managers. That lasted 1.5 years. Then my boss's wife was to be a GM in Crompton Greaves.
Okay.
She called me and said, "Why can't you join me?" And I've always fancied about FMCG, but I realized after 1.5 years I was completely misfit because it was much more hardworking in terms of going to the counters.
So don't tell me you don't like hard work. Huh?
I love hard work in the sense that I was in Bombay. I never knew Marathi, and my location was from Bandra to Palghar.
Okay.
And most of the retailers were talking in Marathi, and I used to find very difficult. Coming from such a small coastal village, very difficult to do this. But having said that, I think 6-7 months I got settled down pretty well in Crompton Greaves. I did well. I got promotion and all these things happened. But that boss, one more boss of my immediate boss, quit and joined Fort Credit Kotak Mahindra. And he always believed that I had a flair for finance, and he got me there.
Okay.
I think that's where my finance services career started. But when you look at 90s, we are all part of the India story.
No, so you are saying both of your jobs were actually referral jobs. You are not looking out.
Even today, all jobs were referral.
Okay.
Yeah, maybe in Axis Securities, when I came in, I just had to take a printout of LinkedIn. And HR asked me that at least we require some
document.
That's how it happened. So everything is about relationship, your networking, and all these things helped me where I am today. But interesting, the 90s were all about car finance. So if you ask any capital market guy who started in 2001, 2002, it's all about saying that, oh yeah, I was a lender. Everybody was a lender. So I understand lending pretty well because we didn't have a CIBIL score. We used to look at IT paper, and most of the 61 IT paper was all fake. And we used to have multiples on that. And I was a South head for Fort Trade. I think that taught me the fundamentals of lending. Ford and Kotak both had this culture saying that if you don't know how to collect money, you can't lend. The substantial portion of our time when we started in car finance is that how do you collect money?
No, and I think the entire financial system, if you think, it's essentially largely leverage, right?
Yeah.
So if you go wrong on risk anywhere, whether it is credit risk, operational risk, the blowout is huge because it magnifies.
Yeah, it magnifies,
Everything
yeah.
is built on leverage. So a very interesting point you made that at the beginning of your career in financial services, if you get a grounding in risk, I think it pays you very, very well over a period, right?
I agree. Uh, when you look at even mutual funds, fixed income, for example, is a lending business for us.
Yeah, yeah, yeah.
We have 1 lakh crore AUM there. We run credit funds. And the basic uh, thought process about how to look at credit actually helps us most of the time.
Yeah.
So you know fundamental about how the lending has to
No,
happen.
you've touched upon a very, what should I say, a subject I love. I started my career as a credit analyst in CRISIL. So,
Okay.
so this is a subject I really love. And yeah, absolutely. So, I mean, obviously great going. And so let me, I'll talk about how market is doing, etc. But let me talk about your moving into Axis AMC in this role. Obviously, you had joined Axis Group to run their securities business, and there was, if I can use the term, a little bit of crisis at Axis AMC when you were kind
Yeah.
of asked to take charge of the ship. So now, obviously, things are settled down, etc. So, anything you want to share with us? How was the transition? How did you manage? Because there are a lot of stakeholders, by the way.
Yeah, I
This
agree.
business is all on trust. There's nothing else you
Yeah.
have.
So I realized when Amitabh told me that he wants me to take over, I think first answer is yes. Then when it was at 9 o'clock in the night and we had a function in the access house, and I was going back and suddenly realized that there is so much of responsibility today because we manage public money.
Yeah.
We have people doing 100 rupees ship to a lakh of ship.
Yeah.
We have large money from corporates, the treasurers, and as we speak today, we have 3 lakh 10,000 crore assets.
Wow.
And you look at 1.5 years back when we started, we were at 2,25,000.
So
We
you've
have,
actually grown 50%
yeah,
almost.
we have now almost 1 lakh plus 1 crore plus customers, and industry has around 4 crore plus. So every fourth customer will find an access customer.
So if I any one or two top learnings you want to share, because I mean this is, what should I say, crisis management as best, the way Axis has managed the entire thing and has come out actually stronger on the other side.
Yeah. The two things I think one is the stakeholder is our own employees, as in the stakeholder which is our investors. I think, and third is your people who are advisors in the market. I think three components are very critical when you take over when there's some crisis. The crisis, my view is that it should not have happened. I think it's a individual employee which we did something. I think in our case, I think as an institution like Axis, this event should not happen.
Yeah.
There are a number of reasons, and we can answer why it happened.
Yeah, that's okay. Yeah.
I think more important also is that our performance was not up to the mark that point of time, and there are a lot of analogies saying that it's because of that incident, but I think it's untrue. Our
No
underperformance,
correlation. No
our
correlation.
underperformance started almost a year before this event happened. When there are two components here, and you have three stakeholders, right? You have employee, investors, and the key stakeholders, the advisors. How do you address them? How are you transparent in terms of what's happening? I think first 6-7 months went communicating to all the three stakeholders. Very important is our employees. Very important to bring back them in terms of saying that we have fixed date, and all the employees become a part of our crisis, and they make sure that we are up the curve now.
Yeah, and whatever has happened has happened. You have
And
to
I think
move forward. Yeah.
that has worked well. In fact, we are able to attract one of the best of the talents now. If you look at the CXO level, we have a fairly very, very experienced people who spent at least 15 years in the organization. And this structure was created for our growth. We have a great, we have articulated that we have a vision to be a top 5 player by 2027. I think that was the reason why we created this structure. People came from experienced large AMCs to help us out. In that sense, I think employees and outside world as really have not changed our philosophy. Our attrition rate is the lowest in the industry now.
Well,
We are below 15%. The industry has
I'm sure this
19%.
great office has to play a part in that.
I always strongly believe that work culture is important, workplace is also
Yeah,
important. I think you
absolutely.
can't say that I have a great culture but I have a very bad workplace. I
Yeah,
think
yeah,
these
yeah.
two things correlate. Investor perspective, I think we went out, we communicated very clearly in terms of what is the strategy, what are the things that changed here. I think the confidence is coming back. Our performance today, if you look at from investor perspective, most of the funds are now 6 months will be my first quartile. There are a couple of funds we are already at number one. We come back, and we have no change in our investment team today because we had only one head of equities quit us because he wanted to do his only personal career. But if you look at our performance, we are back again, and this is the same team which had delivered 10 years of undisputed leadership.
So before I move to the next point, I think the one takeaway which I am taking is be transparent and communicate. So over communicating is better than under
Yeah,
communicating.
when you're crisis, it's very important. I think I still remember I came and met you guys at the early stage.
Yeah.
All the key stakeholders in our mutual fund ecosystem has been met. I think that's where you over communicate and say what's happening. And we were very transparent. And a lot of large institutions today have come and done a due diligence.
Yeah.
And if you look at large corporate businesses, what we have in terms of fixed income, today we are the highest in terms of the maximum in terms of the way they look at our AUMs. We just moved very well. I think my view is that we are quite settled down now.
No, and I think I think a lot of credit should go to our regulatory ecosystem also because the way all the assets and money is actually held, that investor money is ultimately safe.
Yeah.
There's
I
ऐसा
agree.
नहीं है कि investor money will be stolen or something will happen because everything is third party. There are demats and there are strong governance around that, which is large credit to the regulator that the system is such that investor money ultimately remains safe.
See, I was part of the capital market business when the ring system was abolished when we became an electronic system. And I have seen this industry growing, capital markets as such, with mutual fund broking, investment bank. I've seen huge change. I think the change has come just because there is a huge amount of regulatory intervention has happened. The transparency has come to place. People can talk about saying that today there is a huge participation in capital market. I think a lot of credit has to go to regulator because there is a confidence in investors that my money will not go anywhere. And there is a complaint reversal mechanism put in place.
No, and sometimes I myself get amazed that, as you were saying, that there are so many investors who are starting with, let's say, 100 rupee SIP. There are large investors who are doing 1 lakh rupee SIP, and both of them getting the same NAV. Both of them, when they are putting the redemption in whatever T+1, T+2, whatever is the mechanism, both of them will get money in their bank account at the same time. I mean, at times it feels magical almost, right? And the way industry has grown and has managed scale, it almost as if it is magic.
I agree. I think one point comes to my mind always when I leave back home every day is that look, we have 1 crore plus customers. They kept their hard earnings with us. And it is up to us to achieve their financial dreams. I don't think that any other profession gives you that satisfaction because you are fulfilling somebody's financial dreams.
Absolutely.
I think it is just not AMC. People like your platforms also does that. I think for us, more responsibility because I need to deliver that return to the investor. I think it's very important to think about it. I think we spoke internally to our CXO team about this. I think we talk about saying that what responsibility we bring in. And it also gives me satisfaction that I'm in a job today, which I'm trying to do effectively is to fulfill the financial dreams of individuals.
And again, if you think slightly even more macro, then you are helping a very small investor also in nation building, isn't it? Because all of this money eventually is going to companies who are kind of building the country for the future. So otherwise, an investor with 100 rupees, वो क्या nation building के बारे में सोच सकता है? But now they can. They are participating in capital markets. They are contributing to nation building. So I think this is absolutely magical. So kind of briefly you were mentioning about your investing style, and I think if I go back maybe 4 years, Axis was absolutely rocking, and the reason was growth style of investing was in the fore, and Axis was the poster boy of growth style of investing, right? All across the board, number one Axis. how did you manage this transition? Because I won't say it was a crisis, but it was a change, a big change in philosophy, so to speak, isn't it? So how do you manage this transition that the fund house should not stand out for only one style of investing?
A couple of things. I think on a top four funds, we continue to be a growth style.
Okay.
We continue to be growth style. Today, if you look at our equity fund managers, today we are the largest gang of fund managers.
Okay, largest team you have.
Yeah, we are largest team and we are 9 fund managers.
Oh, wow.
Idea was to have different styles. We as asset managers would like to manufacture different styles. It's a distributor which decides which style will work.
Yeah.
So that we bought in that. That point
So
of
essentially, you are giving the choice to the investor.
investor and the distributor or advisor to decide we can pick and choose.
Yeah.
We don't want to be known to be only one style because when the style goes off, I go off the shelf. And the idea is to become very consistent. When I said consistent, one is the style consistency, second is on the performance consistency. These are two things what we try to do. We had if you look at a growth style, any emerging economies, growth style did very well. Growth and quality did extremely well.
Yeah.
That point of time, if you look at quality as a stock, there were only few quality stocks were there in terms of the framework.
The universe, we have.
Universe was very small. And we ran a concentrated portfolio, nothing wrong. I think me and Ashish Gupta joined as CIO along with me from Credit Suisse. I think one of the things we said that's why did we underperform? Ultimately, we came to know about it's not because of stock selection. We continue to have one of the strongest in terms of quality. It is just because our style is off. Second, also looked at from risk management perspective is that all our funds were little looking alike. And if you look at commonality was high at 65%.
So if one will do well, all will do well. One will do bad, all will do bad.
If you look at today, our commonality is reduced to 35 to 40%.
Okay.
Most of the time, I think that way our commonality is reduced. We are running a very concentrated portfolio. Today, we are stocks are up by 30-35% in every portfolio because the nature of the markets have changed. It's not that we don't like to do a concentrated portfolio, but nature of the markets have changed. You have much more basket of quality stocks coming in. I think in that sense, philosophically we're not changed, but in terms of our style, for example, we used to carry a lot of cash calls. I think in principle we have taken a call. In principle we have taken a call that we will not take cash calls because it is not our job to do an asset allocation.
Yeah, the customer has given you money for equity.
But interestingly, 2019 we took a cash call, it worked well. But in 2022 that didn't do well. But our idea is that is only one change which you can articulate is that we said that our job is not asset allocation. Our job is money is given for equities, we will continue to invest fully. So if you look at our funds across, including our small cap, we are almost 5 to 6% of cash levels. The cash levels have changed. So that is helping us. That is helping us.
So you mentioned small cap. So let me, kind of pick your brain on how the market is stacked up as of now. So in general, mid cap, small cap, they've had a dream run, right? And it happens every cycle. It happens.
Yeah.
Generally, it happens slightly, late in the cycle, right? Mid cap, small caps. But this time that period has been slightly elongated, and it has been almost like 1.5 years, closer to 2 years that mid and small caps, particularly now to even micro caps, have done so well. If I look at the kind of return some of the SME stocks have given, I mean, it's kind of unfathomable that any fund manager will ever be able to give those kind of stocks. In general, my personal view also is that okay, it's been a good run. It's time to take some money off the table, be in large caps, because valuation in general are very supportive for large caps. So in your largely the portfolio construction that you are having today for Axis, what would be your large, what should I say, the market cap based view? Whether it will be that no small cap, mid cap, still they have a lot of room, or whether you prefer large caps.
I agree, Rohit, in terms of when you look at valuation of large, mid and small, the comfort is still with large because relative performance is what it is.
Yeah.
I always look at the earnings.
Okay.
The market is a slave for earnings. I think if earnings is good, the stocks will do well. Coming back to your small cap, why it is different this time versus earlier years? Because when you looked at 2007, we had a small cap rally. We had a same macro cap rally. We had enough NFOs coming in, IPOs coming in everywhere, right?
Well, same end cycle.
End cycle.
Yeah.
But I think that time the small caps were held by retail investors largely. Today, the hands has moved to the fund managers.
Okay. So there's
So in
stronger
terms of
hands.
selection of funds, stocks have become much better than what it was earlier.
Okay.
So in that sense, there's a large comfort saying that, okay, the money is flowing to the small cap. But I always said that when I look at our own small cap, and we have stated one of our call outs to be a bit different than other fund houses, that we will work towards risk adjusted return. So we called out several times saying that we will never be a number one fund for small cap.
Okay.
We will be in first and second quartile, but we'll be a top 6 or top 5 player because we do believe risk adjusted is a problem. Because that's the amount of risk what you take for a rupee you've invested. I think risk adjusted is what we look at. So if you look at our portfolio, our betas are much labor. And if you look at our, we still have a leeway of 80% and 20%. You will see a lot of large cap in that 20% leeway.
Okay. To give that balance.
To give that balance. Having said that, we have moved the breadth. I think one point of time we had a 60 stock, today we are at 90 stocks, but we still believe that that's the size we will operate.
No, but I think even the fund sizes have become so large that you need to have like a lot.
Yeah, as we speak today, we are the fourth largest. We manage almost 23,000 crores.
In your small cap.
Small cap. Given the between three caps, which I always think about, is that from investor perspective, what is right to do is that choice is to do a flexi cap versus a multi cap. I think this conversation I had last October, and a lot of people said you should look at flexi cap. My view is that flexi cap today is almost like 65% large cap. And the idea is to look at multi cap. I think multi cap is one.
At least minimum 25% you will have.
So you give a flexibility but a cap to fund manager. I think that works much better. Multi cap works much better. Instead of just focusing on small cap.
Okay, I'll think over it. My personal portfolio, I'm again slightly more long on flexi caps. But I think it makes sense that you are giving some boundary conditions that minimum 25%. Just for our viewers, multi-cap by regulation 25% large cap, 25% mid cap, 25% small cap, and then the balance 25% is flexible. Whereas in flexi cap you can play across.
Yeah, I'm not saying that we should not put money on a flexi cap. It depends on what risk profile you are.
Yeah.
Having said that, the differential between risk profile of A and B investing is almost similar between a flexi and multi-cap. But given the market today, you have that comfort between the caps what is put in.
No, I think it makes sense for some investors. Again, it's an individual choice that you have some boundary conditions where you are saying, okay, you are a great fund manager, but please put 25% of my money in small cap.
That's right.
So I think some boundary conditions help. And I think consumption is something that you are bullish on.
See, we generally don't do thematics which are very narrow in terms of so if you look at our themes are largely diversified. For example, when you looked at manufacturing, when we started last year, we raised the largest fund of 3,400 crores. Today, 6,000 crores is the top performing fund, number one fund consistently. When we looked at this type of themes, we also look at whether it is a multi-decadal change. Then only we'll come to thematic. We don't come with a very, very narrow theme. The problem with narrow theme is that you will raise money, but when the theme goes out, you end up with a smaller AUMs and you find it difficult for you to manage.
Yeah.
The idea here is to look at themes which are much more broad-based. So when you look at manufacturing as a theme, very interesting is that you don't have finance services and IT.
Okay.
So if you look at traditionally, if you look at most of the diversified large and mid caps, you are overexposed on these two segments.
I mean, they were the largest sectors in India. So
you buy that. But if you look at from an investor perspective, you are exposing more. So manufacturing was a completely different theme that point of time and did well. The consumption is also from that perspective. We do believe that
you have some, I think, some NFOs there, right?
Consumption NFO we started off. Starting from tomorrow till 6th. Very interesting is that it's a very, very broad-based theme and it's a different product.
No, so consumption. Okay, I'll pick your brain. Give me 5 minutes.
Yeah.
Huh? So consumption. Forget Indians. The world believes India is a consumption story. Okay, largest population, young population. High growth rates, high disposable income. So there is no disconnect in the macro theme. But the counterpoint to that is every stock in consumption basket is so expensive that how do you find out where to invest? So that is the counterpoint. That the macro
see,
theme is nice.
I think if you look at ROEs of these consumption companies, they are much higher. Hence,
Obviously.
they get a higher multiple.
Yeah.
If you look at, let's look at two-wheeler companies. I think two-wheeler companies underperformed for the last 7 years. Today, if you see that they're getting better in terms of the earnings because there is some rural consumption coming back. One of the examples.
Yeah.
We believe that the earnings of this company should look much better. When you say consumption, most of the people believe that it is FMCG. If you look at consumption as a category or a benchmark, you have other companies, other sectors which are very broad based, like you have real estate, you have auto components, all these things. But it doesn't have an exposure to finance services and IT. So it still gets you a completely new flavor. My belief is that if India need to be a 2030 a trillion, your consumption economy should do well. The consumption economy is going to be a pillar. One is the investment pillar and another consumption pillar.
I personally don't have even an iota of doubt it will do well. But where my needle always gets stuck is, are the stocks already so expensive कि stock में पैसा बनना चाहिए? Companies will make money, but if the stocks are too expensive, investors won't make money.
So you need to look at two things. There are stocks which are cyclical and non-cyclicals, right?
Yeah.
The cyclicals can be expensive for you.
Yeah.
But the idea is to how do you manage the whole portfolio. My belief is that earnings in these companies looks good. I've always said that a lot of people ask me, what's the froth in the market? How do you define a froth in the market?
Yeah.
I think my simple answer is that, for example, we expect Nifty companies to give 13% earnings and you add 3-4% premium. Above that is all the froth.
Yeah.
The earnings of this company will decide. My view is that one way to look at valuation, I don't say that valuation is not cheap. It's not cheap for any stock in this country.
Yeah.
Everything has run expensive. But I think our view is that there are opportunities and there are high growth companies. That's what we think that this company should do much better. And there is a fair amount of investment thesis around this. So if you look at index gives you a lot of answer. So another thing is that it's not that consumption theme is not in the country today. There are smaller funds which have done well. And similar questions we had when we started manufacturing. If you look at manufacturing last year, you would have seen the most of the companies in manufacturing were
that point in time were expensive. Yeah.
very expensive. Today, if you look at the companies earnings have
They've become even more expensive.
even more expensive.
Yeah, no, that's true. So, I mean, consumption, there's no denying the fact that this country, if consumption will not do well, we'll have to rethink our entire country's economic model. So,
Yeah, then again, you have to think about, see, most of the funds are benchmarked either around a Nifty 100 or a Nifty 500. And you look at commonality between them, it's around 35 to 38%. So, there's a common stock between these indices. You still have an opportunity there also.
So, what other sector you're more bullish relatively on?
We traditionally were known for consumer. If you look at most of the portfolios, traditionally we had a consumer-facing companies, right? I think some movement we have done in terms of capital goods in the last 5-6 months. I think as a capital goods, we are now overweight on most of the capital goods sector. I think not saying that we are not on the consumer. I think traditionally, if you look at our top 4 large funds, you will find most of the B2C companies, whether it is Avenue Supermarket.
So I'd link capital goods to capital formation now. Okay.
Yeah.
Capital formation, capex, and the sort. And obviously, their interest rates are one of the big prime deciding factors. India globally. So we had this entire yen carry trade and mining, etc. All of that happened, and now the murmurs of Fed cutting rates, etc. has again become very strong. Right, it kind of died down a little bit, but has again become very strong. Now there are two big macro events colliding in US at this point in time, which is Fed, and then November we have the election. And again, whatever at least we sitting in India can read, it's again a very bitterly fought.
That's right.
So would you think Fed will take a chance and take any economic decision, or would they wait for the new administration?
I spent 2 weeks back in New York. I had met most of the large asset managers. I think their feeling is they'll cut in September.
September.
I think there is a fair uncertainty of 50 basis point. I think that's
Oh,
what.
50 basis points.
Yeah, 25, 50. That's what consensus is around that. I think that will happen. I think when you look at from a capital formation perspective, since we spoke about, I think very interesting is that today Indian market is very stable because of domestic flows. And one thing is really changed. I've been in this market for last 23 years in capital markets. Very interesting thing is that the behaviorally customers have changed. One is that there is a large structural change from a saver to investor. So the first investment people are doing is not FDs. It has become mutual funds. I think there is a large change. And most of the things happening because of fintech players. I think fintech players.
So Gop, I think I have also personally been in the market now for 16 years. I think the ease of investing and the ease of taking money out that when you want, both are important, right? When
Yes.
how to put and
Yes.
how to take out. It's so easy. 2 clicks, you go
Yeah.
on, any
That's right.
app, and just 2 clicks you can invest. 2 clicks you can take your money out. I mean, how उससे ज़्यादा easy क्या चाहिए?
And second, we also have seen a lot of money which is invested in traditional investments like national savings certificates, longer term FDs, corporate FDs, all getting matured and people coming and putting in mutual funds.
Yeah. No, so is that a red light also somewhere?
There is a red light. It's not that it is not red light. I think you have seen there are some analogy in Japanese market about the way it happened.
Yeah.
And the froth will create a bubble.
Yes.
I think we are not in the stage of bubble, but there is some level of froth. But we
No,
need.
do you think because markets were doing well and hence investors have stuck around? If markets do bad, this entire story, investors mature ho gaya hai, all of that, we have heard so many times.
I think the test was on July 4th when the election result happened. The industry got 20,000 crore flow. So every fall in the market, we are getting money. I think that's a large change.
Yeah.
Uh,
And see, personally, at least if you ask me, I think SIP is a beautiful, whoever thought of it is a genius.
I
It's
agree.
such a beautiful way of investing. I don't think any investor needs to even think कि कुछ और करना है. They should start with just an SIP. Whichever fund, pick one fund, कुछ नहीं समझ में आता, pick a Nifty 50 fund, but start an SIP.
Yeah,
It's
I think
beautiful.
that is what is changing. Today, we still have long way to go in terms of penetration. Long way to go.
Long way.
We are just 2.5-3% of the economy. I think pretty large to go. I think one of the things gets excited me on this job is that there's a huge amount of financialization happening, which is backed by digitization.
Yes.
These two pillars, I think, my view is that can change this economy.
And you think, I mean, if you see the deepening of the issuer side also of the market, where so many new companies are now accessing. We just had an EV company
Yes.
with their IPO. Now we are going to have a second largest car company in India with their IPO. So in that sense, the choice available to investors and fund managers like yourself, that also is broadening.
Very broadening. Very broadening. If you look at the themes available in the market, I never thought that in India we can have a listed a snack company.
Yeah, absolutely.
One of the snack company we had invested in our private equity fund and it went for listing. I used to get surprised that if a refer company can get listed and raise money in the market.
Yeah.
I think Indian market gives you a lot of flavors. We are just not FANG stocks or AI stocks. I think today that gives us a lot of challenges. It's not that we can't. There is a lot of challenges because what type of stocks we cover. For example, our coverage has moved from 350 stock to almost 480 stocks now.
Yeah, but then there would be another 400 you would want to cover.
Yes. And today our strength of research team is almost 16 people today.
Wow.
I think fundamental becomes very difficult. So you need to cover more stocks because you require to find new ideas. I think that becomes much more challenging.
No, but I think again credit to asset management companies also. They have also invested in people, in systems, processes, right? So it's not that AUMs have become big and the team sizes are the same. Everyone has expanded. They have hired more people. They have hired experienced people, and there have been kind of influx of people from industries. You mentioned Ashish was not from an AMC, right? He was,
He was on the sell side. He was the head of research.
He's come back, and in that sense, AMCs also have invested and strengthened their teams to kind of handle this large money which they are getting. So it's nice. So I think we are at time. So maybe Any parting thoughts? Anything you would want to?
Nothing much. I think my only thing is that please do SIPs. I think please don't stop SIPs. The bigger problem is that when people look at return, they tend to say that I made enough money so that I want to in cash.
And both, sorry, I'll just interrupt you. Both, I have not made return and hence let
Yeah.
me stop. So both temptations you should
Yeah.
avoid.
Good to have a FOMO that my neighbor has made money and I need to be investing.
Yeah.
That is also the
Yeah.
FOMO actually is driving this market also.
Yeah.
So please invest. Keep your goals clearer. I think I'm also in the camp of asset allocation, but my bigger camp is saying that in my mind always that you have a goal planning properly. What do you want to achieve with this money? And more importantly, that invest early in your career. I think when you start earning, please start investing. I think there are platforms like Kotak which will help you and handhold you. And in my days, I think I used to wonder whom to go to start a mutual fund. Today it is just on a click of the button and it's completely digital. I think your platform uses that whole digital. And you need not to track your performance on the funds every day. I think a lot of people do
so
that.
That temptation, I think one should avoid.
I think you need to review once in 6 months, once in a year. I think just keep fundamentally right. Another piece of advice which I tell everybody is that invest money in simple products. Don't complicate yourself by trying to do features and option. Don't complicate. Simple mutual fund product is good enough for India's story. If you want to create wealth, just look at simple products. I seen in my career, we also build a lot of complicated product, me and Rohit in our careers. And I was just telling somebody in the marketing team that we created that MLDs, CAPG product, non-CAPG product. But I think my biggest learning of 2008 crash is that all this looks very, very fancier and you get hooked onto this. But simple product by simple diversified mutual fund, it will work for you. And I think we all complicate ourselves.
Simplicity is the ultimate sophistication.
Simple. We don't have to worry too much.
So on that note, thank you.
Hey, thank you very much, Rohit. Thank you.